A very good afternoon to our viewers here in Nigeria and around the world. Welcome to Business Incorporated. I am Bosin Amafaye. We thank you very much for joining us at this time. Coming up over the next 30 minutes, the world's largest independent oil trading firm predicts crude prices will remain low for as long as the next 10 years. And South Africa's rand stronger along other emerging market currencies after softer than expected employment data from the United States reduces bets of a rate hike by the Federal Reserve. Plus, Japan's Nikkei 225 closes higher today with most of Asia shut for the Lunar New Year celebrations. Now let's get the show started. The world of oil in the news. The world's largest independent oil trading firm Vitol says oil prices will stay low for as long as next 10 years, according to Vitol's Group Chief Executive Officer Ian Taylor in an interview with Bloomberg. Taylor, however, says crude prices are likely to recover with midpoint of $50 a barrel for the next decade. The Vitol CEO forecast comes as oil trading community gathered today in London for their annual International Petroleum Week. And Taylor tells Bloomberg that oil prices will recover to around $40 and $50 a barrel towards the second half of 2016. He, however, warns that oil prices will never again rally above $100 a barrel. Now let's move on to the rest of the story here today. Mark Mobius, the emerging markets investment guru, says he no longer invests in Brazil's troubled national oil company Petrobras. Mobius, however, says he would only buy Petrobras shares if oil prices are up sharply and oil firm is run successfully by cutting his huge debt portfolio. Mark Mobius, who is the chief executive of Templeton Emerging Markets Group, tells journalists in Sao Paulo at the weekend that Petrobras may need a government bailout to overcome its financial challenges as the world's most indebted company. The Brazilian state oil firm ended third quarter 2015 with $129.65 billion in total debt, up 44% on 2014 figures in local currency terms. Petrobras planned to sell some $15 billion in assets this year to pay down on its debts. And now let's check through the Asian markets today. A very blistering day for global stock markets. Stocks are down, oil prices falling. Bloomberg's commodity index down about 0.75%. The Tokyo Nikkei 225 closed higher today, however, with most of Asia shut for the Lunar New Year celebrations. The benchmark index, that's the Nikkei 225, finished 1.1% at 17,004. On Friday last week, the U.S. says it added 151,000 jobs to its economy in the month of January, pushing the country's unemployment rate down to 4.9%. The numbers were lower than expected, however, marking a big slowdown from December's addition of 292,000 jobs. The world's best-selling car maker, Toyota, saw its shares down 1.2% on the Nikkei today. On Friday, Toyota reported a 4.7% rise in net income for the 3 months ended December 2015. However, the firm's operating profit for the quarter fell by 5.3%, missing forecasts. A very big day in Europe for the markets. They are now in the red, sidestepping what happened in Asia overnight. The U.S. pre-open is also in the red as we speak. Europe's markets are around 1.5% on average in the red across borders as we speak. German bond 10-year down 0.04%. Gold is off track by 2.15%. Metals and oil getting hit. The Brent is off 2.1%. Early today, that was in London. The U.S. oil around 1.91%, also in negative territory. $30.31 for the WTI, $33.35 a barrel for the Brent. All eyes on the ECB and the U.S. Fed as to what happens next with interest rate direction and whether the two reserve banks will be able to lift Europe out of its troubles. Now let's take a very quick break. We'll be back with some other stories. Emerging currencies, South Africa, Russia. We will talk about that, including China, in the second part of the program. Stick around. We'll be right back.